Well, hello, members. My new Elgato microphone's broken, so I'm using this MacBook mic. It's a little bit weird, and also it's not going to be edited like I do for YouTube. So this is it. I'm just going to have a quick look at the charts, really, and show you what I'm thinking. So we're short on the euro. I don't know what the euro is going to do. I've got an idea, though, that we might have some life left in the US dollar, so it's possible that we'll get some pullback on the euro and the pound, and the Australian dollar is already moving down. The Aussies didn't raise interest rates, and the Canadians didn't either. But we're seeing, so we're seeing some pullback in the Aussie dollar. We could have shorted that one actually, maybe missed a trick there, but it had broken up through resistance, so it was a bit deceiving. And hopefully the euro and the pound will follow suit. I don't really know. This is really, really difficult, and it all boils down to the dollar index and what's going to happen with the dollar. I've got the idea that the dollar weakness that we're seeing is possibly not sustainable. And we were just talking about on Twitter that, is the dollar finished or not? There's an awful lot of noise about the dollar being over on Twitter and on YouTube and all over the show and even on CNBC. But we've got a major problem with inflation and with banks. And if the dollar really collapses, it's going to cause all sorts of problems in the mortgage market, and it's going to cause a problem in inflation as well, because we're going to see, and this is in anticipation of a Fed rate cut perhaps, or at least a pause, like we're seeing in other central banks around the world. Interestingly, even though their inflation rate's lower than the US, we're seeing other central banks pausing their increase in interest rates. So what's going to happen is, if the dollar continues to weaken, we'll see commodity prices continue to rise, and we'll see banks continuing to have problems and all sorts of things. And the Fed's really stuck between a rock and a hard place. I think they actually need a stronger US dollar. And perhaps we'll see some rebound, some intervention of some sort. I don't know. But I think we still have a very vague chance, as long as we hold above the bottom of this sort of low here, going back a very long time, actually. The support zone, it's not really a clearly defined level, but it's around about above 100, going back a very long time. My charts are a little bit slow, so sorry about this video. It's a little higgledy-piggledy. So you can see going all the way back into 2020, where we saw this zone here, a lot of activity around there, very chaotic with COVID and all that sort of thing. But support here and support a few weeks ago, double bottom potential perhaps. I don't know, it's looking weak, but I don't know if we're going to see the dollar actually rebound here. I think there's a chance of it. So whilst we're above, I think, 100, the bottom of that zone, we need to continue to try shorts on euro and pound and so on. The other currencies that we're in, Euro CAD, short on that. Canadian dollar, I think, overall has a better chance against the euro and the pound for a variety of reasons, in terms of the economy of Canada and the conditions on the charts. But let's just have a look at this one, for example. Yes, Canada did not raise interest rates, so we're seeing some weakness in the dollar, Canadian dollar, overall, but not too bad, really. It's been strong against the US dollar, a little weak against the other currencies, especially the Swiss franc, and the central bank, the Swiss central bank, did actually raise rates. But we've got this head and shoulders pattern on the Euro CAD, and I think that we've got a very overextended chart overall, and I think that we could see Euro CAD dropping back into somewhere down, actually around the 42.50 level, where we saw this double bottom. And we've just been pushing up, pushing up, pushing up. We've held above this support here, but we've got a head and shoulders, and I think generally overall, fundamentally, the Canadian dollar's got a better chance than the euro. And yes, the euro raised interest rates by 0.5%, but they're still pretty laggy. I think it's 3% now, or 3.5%, compared to other countries, so it's quite low. And the interest rate differential between the euro and the dollar and the other currencies is that the euro is lagging behind the European Central Bank. So I think we could still see some problems coming up in the Eurozone in terms of overall. We've got incredibly high inflation in Europe and lower interest rates. And I don't think they're going to be able to continue to raise interest rates, especially as other central banks are cutting. So overall, I think we could see some weakness in the euro against the dollar and the CAD. So let's see what happens. The favorites still today, the yen pairs, all four of these really. The euro yen, yeah, we could have sold there against that 200 period moving average on the 4-hour chart. Just missed a trick. I thought, however, that we could go up a little bit higher on this pair, up into this sort of 90.60 to 91 level, but we didn't quite get there. We only got to the 200 period moving average, so we didn't get that trade. But we are short on euro yen, and overall I think this chart is pretty good. Longer term, we've got this, what we saw in the Australian dollar yen is this crowning pattern, and my target for euro yen still remains down here, down towards the sort of 130 and high 120 levels. So 130, 125 in that region down here, which is where it normally spends most of its time, going back over decades and years. So we're seeing this crowning pattern, and every time since that peak, we're making progressively lower highs, and we've now potentially got a double top here on this 4-hour chart, 2 big wick highs, 3 actually, over there, looking quite good for a move down. We've got to get through these moving averages. So that's the euro yen, and Australian dollar yen. I think we might have missed the boat there for a little bit, but maybe we'll get a chance later on. And the other one is dollar yen, US dollar yen. I kind of like this short as well, but I think we might have to just go up a little bit. These ranges are very big. That's the problem on the chart, because we've seen such a lot of movement in this currency since that high at around 150. So this, what looks like fairly small ranges from where we are at the moment at 131 to the top of this tiny little bit here, takes us all the way up to 134. So that's a 300 pip range, just that bit there. So you can see how vast these ranges are on dollar yen. And if you are going to be trading this, I like the short idea on this very much. But if you want to be shorting dollar yen, you're going to have to allow for very large stop losses. And in fact, we'd want a stop loss above this high here at around 138. We're at 131.50 now. So that's 700 odd pips above us. It's a very, very long way. If you want to get in, you could get in with a very small trade and start to, a tiny trade, and start to average in as we sort of move back up perhaps to 135, 136. And you could use a hedging strategy, which is what I tend to use. I think overall there's a really good chance of this moving down into the 120 level, somewhere around where this green line is. But I think that's a sort of almost foregone conclusion, really. But if you're going to be trading, you either got to be trading a very tiny amount, averaging in, or take a slightly bigger trade and then be prepared to hedge if it moves against you, taking long positions, covering those long positions for profit, and then and just adding short positions at the same time, covering the long positions. Quite a complicated strategy if you're new to trading, so a bit tricky. So those are the yen pairs. NASDAQ and S&P. I don't know again. I'm too scared to call this. I don't know if we're going to get much below 12,960 on NASDAQ. That's that red line that we bust up before earlier in the week. Very, very key resistance level. As you can see, going back on this chart, super key level, and we're above it. And above us, we've got 13,700. That's the next stop, really. There's not a lot in between where we are at the moment and 13,700. So play that one as you will. I'm not willing to take any real bets on NASDAQ or S&P. Same goes for S&P. NASDAQ's rallied 25, 27% this quarter, first quarter of the year anyway. So it's incredibly overbought. But S&P hasn't really followed suit. It's showing a bit of weakness. It's only gone up by 7 or 8%. And we're just holding above this line, potential head and shoulders pattern. If you have a look at that, if you're going to short any of these indices rather, this is probably the one to look at. And if we do fail here, it means we haven't reached the channel top, which is a sign of weakness. And if we break back down below this channel bottom, we could see the S&P begin to drop rather rapidly, having formed this head and shoulders. It's a sort of a classic head and shoulders. I can just draw that in for you very roughly. It's something like this on S&P. So, something like that. And then the target would be back down to the bottom there. So might be worth having a go short on that one. I don't know. But in lieu of those, I've actually gone with selling into individual stock names, and we're looking at, and we're already short on NVIDIA. And if I can just get my charts to change, they're a bit slow. We're short on NVIDIA, a little bit of profit on there so far. And there's a number of reasons for this. Technically, it's ridiculously overextended. We've got a trend line that comes up across to where we are now. If I just draw it, you can have a look. Quickly have a look, something like that. Okay, so that's a good resistance level from that trend line going back a long way, actually into 2020. And we've got this green resistance zone above us formed by that top. We could get up to 300 on NVIDIA, but I think it's worth having a little go now, which we have done. So we're in that short, as you will know if you've been following the signals in the trading room. So that's NVIDIA. And again, sorry about the quality of this video, it's very rough. Nothing else I really want to say on that. So S&P and NASDAQ we've talked about. But then going across to gold and Bitcoin and some of the other commodities, we've got sugar just rushing up into crazy heights. Don't know, there's no sign of shorting this just yet, so we'll just leave sugar alone. Soybeans, yeah, I think we've got a good chance of this moving back down. And a lot of it depends on the dollar. So commodity prices all priced in dollars. So if the dollar gets weaker, these prices go up. So if we're going to see some dollar strength creeping back into the market, we should see these commodities come down, including oil, which is across here. And we did gap up once OPEC and Saudis announced their production cut. But we have a massive resistance level above us at around $84, $85 here, this green line. It's also where the 100 period moving average is. That's a weekly chart, and the 50 period moving average on the weekly chart. If we go across and have a look at the day chart, you'll see something similar. That's just a meeting I've got, sorry about that. So here's the day chart. There's the 200. So we've got the 200 period moving average on the day chart, and that same resistance level at around $84-ish. And then if you have a look at the weekly chart, the same thing. It's not the 200 period moving average, it's the 100 period moving average on the weekly chart. So 4 weeks is so daily chart to weekly chart. I was thinking 4 weeks makes a month, but we're not looking at the monthly chart. In any case, that level at 84.50, 84, 85, 86, very key level, potentially up to 88, which is where the 50-week moving average is. But I like the day chart on this. I like the fact that we've got the 200-day moving average just above us. My charts and internet have gone very slow. So the 200-day moving average right there. So if you're going to look to short oil, that's probably a good area at, let's say, 84 to 84.50, maybe 85. So that's oil. And then nat gas, we talk about gold. I think gold, we need to wait for a pullback. It's pretty much done the move that I thought it would do up to 120.50. We didn't get any pullback off this 1950 level. So we want some pullback down into slightly low levels, maybe 1920, thereabouts. Bitcoin, yeah, I've got a tiny short on that. I don't know. Actually, I think this is going to be a losing trade. I think Bitcoin's going to bust up through here, go up to 30,000, maybe 31, 32, 33. It's not looking like it wants to go down. We've got this channel top that we've broken above. And yeah, we've got resistance. We're right in that resistance zone. And unless we collapse back down through here in the next day or two, probably this week, we've only got 2 more real trading days this week because Friday's a holiday for Easter. So if we can't break down here today or tomorrow, I think we might see in perhaps thin trading conditions this Easter weekend, we might have Bitcoin rushing up to make new highs, new recent highs. And then natural gas, for those trading natural gas. Well, really, nothing to add. Go and have a look at the other videos on my YouTube channel. This one's not going onto the channel. This is just private for members, but we're still holding above there, looking quite good, constructive. I'm long from $2, just about, slightly $1.97, and I'm willing to add at 180 and 150. But with a bit of luck, so this is a very small starter position, just to remind you, and I'm willing to add a bit more low down, 180, 150. With a bit of luck, we'll get up through this first resistance at $2.24, then into the 240 zone, then the 265, 270, and then eventually the $3 zone. And as you can see, there's an awful lot of work to be done to get up to $3.50. But you never know. we might just see a short squeeze coming up someday soon. And if we can hold above $2-ish, or these lows at least, that would be a good sign. There's every danger, though, that we drop down to 180, 150. We'll have to wait and see what plays out. I've got a position on this. You know my position. It's been widely publicized. And that's that, really. So good luck with all that. And I'll be updating in the channel if and when we take new positions. So currently, the positions are really short on the euro, short on the euro CAD. We're long on CAD Swiss franc. Maybe we'll hold above here. So the CAD is showing a little bit of weakness, but I think that's just because of the decline of the central bank to increase interest rates. We're at support right now on CAD Swiss franc. So perhaps I think CAD's got a better chance, as I said, than some of the European countries and so on. And then dollar CAD, this one very interesting. I want to short this at a 35.50, so keep that in mind. Bear that in mind. 35.50, that's up here. 50-day moving average. This is a 4-hour chart. 50-period moving average and previous support and resistance. Key level on this one, and that would be foreseeing a low. That would be foreseeing a further move down in the dollar. So this trade is kind of offsetting. If we do get into it, it will be offsetting the euro against the US dollar, because that one is long dollar, this one's short dollar. Okay, folks, take care. I'm going to get this out to you right now.